How's it going, everybody? I'm the BTC Reaper. My goal on this channel is to teach you how to reap the rewards of trading, whether price is going up or down. Bybit follows Binance, suspends USD, SWIFT, and wire transfers. Bybit recently announced that USD deposits through wire transfer for US banks and SWIFT would no longer be available, saying they had services outages from a partner. The new changes will take effect March 10th, 2023. However, users will still be able to make deposits through a credit card or add cash wallet for USD. The exchange noted that an add cash option would be available soon. While Bybit assured its customers their funds were secured and safe, it urged clients with plans to withdraw USD to make haste to avoid possible disruptions. Furthermore, all client funds heed to separate accounts, and the Bybit Earn products do not use the investment arm. Whatever. The Bybit halt comes amid Silvergate's decision to halt digital asset payments network. Binance on February 8th also stopped all withdrawals and deposits from bank accounts using USD. On March 2nd, Crypto.com suspended USD transfers through Silvergate. The move raised red flags in firms such as Galaxy, Paxos, and Circle, which also stopped operations, with the bank saying it was out of precaution. Binance team frauded over Binance US ties, tried to recruit Gary Gensler. An errant Google Forms account and an early trading launch were among the missteps that concerned team members at Binance based outside the United States, who worried that U.S. regulators would flag undue influence over its American licenses, Binance US. These revelations came less than a month after the company officials reportedly discussed paying monetary settlements in pending regulatory cases in the U.S. in December, and the Justice Department said to be mulling criminal charges against CZ. Binance was among many firms that sought to bring Gary Gensler into the fold as an advisor while he was teaching at the MIT, the report said, as many as 2 years before Gensler became the chairman of the SEC. Zhao reportedly wrote, while Gensler declined advisorship, he was generous in sharing license strategy. Don't know why he didn't listen, because he's he's in the crosshairs, which was his goal to not be in the crosshairs. He cited an internal presentation titled Insulate Binance from U.S. Enforcement. The journal noted that Binance wanted to stress that Binance U.S., established in 2019 under a Delaware company named BAM Trading Service, was merely a company that would license Binance's technology and brand. The company, however, is reportedly controlled by CZ. When Binance US was preparing to onboard new customers, an employee mistakenly created a Google form using an account under the internal company, reportedly causing a stir as the team tried to change the form's attribution from Binance.com to Binance.us. An employee fretted on Telegram that the error could be used as proof of corporate veiling. So that's one piece of evidence that they aren't separate. Here's another. A Binance employee launched trading on Binance US, early causing panic in the group chat. It was Zhao who eventually diagnosed that there was a mistake. A guy in Shanghai actually released the trading ability early. So that showed that the two companies were pretty commingled. Catherine Coley was quoted by declaring that they are a very separate entity and they are simply a licensing software to the public, but told members of their team that they were also reporting to CZ and Wei. Everyone post your weeklies before 7 p.m., 4 p.m. PST, so we can be in good graces of Wei. So they've always had to impress the executives of the other arm. You don't have to do that if your companies are separate. U.S. spokesperson similarly said Binance U.S. was founded specifically to serve U.S. customers with products and services to adhere to U.S. rules and regulations. FTX determines $9 billion in customer funds are missing. It's official, FTX is missing a lot of its customers' funds. In a preliminary analysis released by the bankrupt crypto exchange on March 2nd, FTX laid out its current findings for stakeholders and confirmed the worst: a massive shortfall. Only around $2.2 billion in customers' assets have been located. Furthermore, even less of that, $694 million, is in liquid assets such as cash, stablecoins, Bitcoin, or Ether that they can actually use to disperse. One of the reasons FTX ended up in this predicament is the involved borrowing of customers' funds by its trading firm Alameda Research. Sounds similar to what Binance is doing. Alameda had provided a $9.3 billion from FTX customers. $191 million was borrowed by Alameda from customers of the US-based exchange FTX US. So they not only got money from FTX, but they also got money from FTX US, showing that these three companies are all commingled. While the disgraced FTX co-founder and ex-CEO Sam Bankman-Fried once claimed FTX US was completely isolated from FTX's problems, the company's latest analysis found that FTX US has a shortfall in the hundreds of millions as well. FTX's current CEO states that the exchange's assets were highly commingled and their books and records are incomplete and in many cases totally absent. For those reasons, it is important to emphasize that this information is still preliminary and subject to change. We believe it is more important to provide transparency to stakeholders by making this information public now. So, FTX and Binance both had multiple companies where they were sharing money and assets between, which is frowned upon in laws. The companies are supposed to work independent of each other. Economist Peter Schiff warns the Fed could be fighting complete economic collapse. Peter Schiff shared some dire warnings about where the U.S. economy is headed and the consequences of the Federal Reserve's fight against inflation in an interview with Greg Hunter on the USA Watchdog. Citing recent economic data, including the Personal Consumption Expenditure Price Index, which rose 0.6% in January, Schiff said that months of declining inflation are in the rearview mirror, and now we're going to see an accelerating inflation as measured by these government indexes. He said if the Fed is serious about fighting inflation, rates need to go up higher than anyone thinks. We also had to see a big contraction in consumer credit. We need to see lending standards raised so consumers can't keep spending. People are spending money, they keep running up more credit card debt, and that is inflationary. We need consumers to stop spending. We need significant cuts in government spending. The government can't just give people money to spend because that's what's bidding up these prices. He additionally warned that the Fed may even force the U.S. government to consider legitimately cutting Social Security and Medicare, as opposed to just illegitimately cutting it by creating inflation. Bank of America expects the Fed to keep hiking rates until the point of pain for consumer demand. Bank of America senior economist Anita Behave posted a note earlier this week warning that Federal Reserve could increase interest rates beyond the market's expectations to bring inflation down to its 2% target. She echoed that we'll have to have consumer pain. The resilience of demand-driven inflation means the Fed might have to raise rates closer to 6% to get inflation back to target. Several other economists have cautioned that the Fed cannot reach this inflation target without crushing the economy, and therefore causing a recession. A slowdown in consumer demand, which our analysis suggests is necessary to bring inflation back to target, would likely lead to an outright recession. Consumer spending makes up 68% of GDP, and additional Fed hikes would also mean more pain for interest-sensitive, non-consumer sectors, such as housing. So, Schiff and other economists are warning that we're going to have a recession and that consumer spending needs to go down. As you can see, that's 70% of our GDP almost, which means that most of the money we make is from our own people spending money. So onto the charts. Over on the daily, we got a long upper shadow candle here. So that is somewhat of a bearish candle. However, I won't get too worried right away. We had that right here, and that didn't necessarily bring us down. If we look over at our stochastic, we are pretty bullish, even though our RSI is going flat. Our money flow is kind of flat, our VWAP is kind of flat, but our momentum wave is trying to creep upwards. So hopefully this momentum and money flow can start to come in, as well as the VWAP. But the stochastic being up here is a good sign. If we can stay up, then that'll be bullish for us. But if we start to fall from here, then we could start to slide on the other indicators. This is on the 4 hour. Look on the daily, you have the same long upper shadow candle here. Our momentum wave is trying to curl, so we are trying to come up. Our VWAP is trying to come up, but our stochastic's kind of beat down. That 4 hour stochastic and RSI are going to need to stay high for these to start to make a recovery. If we look over at the 2 hour, we have a bit of a reversal arrow, signaling that this sideways trend could be ending, and we could get a move in hopefully a positive move up. Our stochastic is somewhat, we did have a divergence, brought us down. Now we're going higher while price is going higher, so that divergence kind of played out. Our RSI is pointing down, our momentum wave is coming down with money flow and our VWAP coming down as well. We have a red dot preying on the money flow, so that our momentum, so that's a little concerning as well. Excuse me. Over on the 1 hour, we have a red X forming, so that's kind of concerning, and we could be falling out of this pattern. We could also see if we're extending, but then we'd have to go sideways. We'd be bouncing around quite a bit if we just extended out like that. Stochastic starting to fall, we had a bearish divergence. Momentum had a bearish divergence. Our VWAP and money flow are coming out in the 1 hour as well. So we're not looking too good, as we'll need that to get bullish and hold if we're going to see positive momentum. Over on the graph, if we look at the daily, we started our breakdown from this pattern. We do have a bullish divergence on our RSI flashing, so that is a positive sign. Our stochastic is trying to make a bullish cross, but our VWAP is kind of rounding off and looks like it could curl down. Our momentum wave looks like we could get a green dot, but if Bitcoin doesn't get some momentum, then it's likely we won't see that happen. If we look over at the 4 hour, our momentum wave is rounding back over, and we are getting a red dot, so that's a bearish sign. Our money flow is coming out, and our VWAP is pointing down and in the bearish zone. So those are our bearish signs as well. Our stochastic's coming down, and our RSI is sliding downwards as well. If we look over at the 2 hour, money flows in the bearish zone. VWAP is bearish. We broke down, so we got rejected. Our RSI is coming down and our stochastic is coming down, as well as our momentum wave. So we could possibly print a red dot here and see this red X play out and maybe get a more violent move if Bitcoin doesn't gain some momentum. If we look over at XRP, we did pretty much make our full flag breakdown. Kind of confusing using red, looked like a wick there. But our RSI is sliding, our stochastic's heading down, our money flow is trying to cross bullish, so that is a positive sign, but we'll need that to actually hold. As you can see, we keep just flip-flopping. Our VWAP is kind of flat, doesn't know where it wants to go either. Our momentum wave is somewhat trying to curl, but not too strongly yet. Over on the 4 hour, we did have that red X that brought us down. Our momentum wave isn't quite diverging, so we don't have a bullish divergence. Our money flow is coming out. We did reject crossing up. Our stochastic's heading down and our RSI are heading down, so not looking too strong on the 4 hour. Over on the 2 hour, We possibly could get a green dot soon. Our money flow is trying to test that neutral zone, so if we can get above and hold with that VWAP, that'll be a positive sign. Our stochastic's crossing and heading up too, so we do have a chance of a recovery coming in the next couple of candles, but if we get rejected, then we could see more downside. The 1 hour, we're pretty much getting the same signals, but we did get a red dot on the last candle, so as that plays out, we may not see that carryover on the 2 hour, and we may get rejected from here. Over on algo, we are somewhat kind of bouncing above this point of high value profile. Our RSI is falling, our stochastics kind of just flattening out, and our VWAP is trying to cross bullish. So our momentum wave is heading down pretty sharply, so not looking too good. Over on the 4 hour, we do have a bullish divergence, but that didn't really get us anywhere. We have a red dot printing, could possibly get another line for for the bullish divergence. So maybe we'll get that to play out soon, as it'll be a little more exaggerated. Our money flow is coming out, our VWAP is coming down, stochastic's heading down, and our RSI is coming down. So those are looking a little bit bearish. Over on the 2 hour, our stochastic has a bearish divergence here, and we are coming down from it. Our money flow rejected crossing, and our momentum wave had a red dot, and it's coming down. We do have a red X that printed on the 2 hour, so that may bring us even lower, so be cautious of that. If we look at the 1 hour, money flow is coming down pretty strongly, VWAP's coming down pretty strongly, momentum and stochastic and our RSI, so almost every indicator is coming down pretty strongly on the 1 hour, so algo's not looking too strong and may break to the downside pretty violently here if we're not able to get some momentum upwards. Thank you for watching tonight's video. I hope you have a wonderful night.